Are recessions really that bad? What's good, everyone? I am your student investor, and I'm here to help you understand the basics of investing. To answer the question, honestly, I don't know. For the time being, given the existing monetary institutions that we have, recessions are inevitable. They're part of the business cycle. What is a recession? A recession is a significant decline in economic activity lasting more than a few months. It had typically been recognized as 2 consecutive quarters of economic decline, as reflected by the GDP in conjunction with monthly indicators such as unemployment. It is the period between a peak of economic activity and the trough, or the lowest point. How do recessions affect your stocks? During a recession, stock prices typically plummet. The markets can be very volatile, with stock prices experiencing wild swings. When investing in stocks during recessionary periods, the relatively safest places to invest are in high-quality companies that have long business history. These should be companies that can handle prolonged periods of weakness in the market. Although no company is entirely recession-proof, companies with strong balance sheets and strong cash flow are key. Companies that sell essential goods will perform well regardless of what's happening in the market. Consumer staples like Walmart, Pepsi, McDonald's, Costco, Procter & Gamble are examples of companies that will do well in and out of a recession. Maintaining a well-diversified portfolio of healthy dividend stocks, including those in defensive sectors such as healthcare, utilities, and telecom, improve your odds of maintaining a safe income stream no matter how the economy is doing. Investing in ETFs can be a great way to protect your portfolio from the downsides of a recession. An exchange-traded fund, aka ETF, is a type of security that tracks an index, sector, or commodity, and can be bought and sold the same way a regular stock can. ETFs that track sectors we talked about earlier, like healthcare, utilities, will be your best friend during times like this. Let's look at some examples. The Vanguard Consumer Staples ETF, ticker symbol VDC, tracks a market cap weighted index of stocks in the consumer staples sector of the U.S. markets. Its top 3 holdings are Procter & Gamble, Coca-Cola, and Walmart. Next is the Healthcare Select Sector ETF, ticker symbol XLV. This tracks the healthcare stocks within the S&P 500 index. The next example is the Utility Select Sector ETF, ticker symbol XLU. This tracks a market cap weighted index of U.S. utility stocks drawn exclusively from the S&P 500. The top 3 holdings are NextEra Energy, Southern Co., and Duke Energy. Our final example is the Communications Services Select Sector ETF, ticker symbol XLC. This tracks a market cap weighted index of the U.S. telecommunications and media and entertainment components of the S&P 500 index. The top 3 holdings are Facebook, Alphabet A, and Alphabet Class C, which is basically they're both Google. ETFs are also good outside of a recession. I'm not a financial advisor, so I'm not telling you to invest in these. These are just examples that you could invest in. It's important to do your own due diligence and research every investment before buying.